everybody, Brian McQueen, Foundation First Realty Group. I am out at my listing today at 414 Donald Drive in Rotterdam. It is a 4-bedroom, 3-bath with a finished basement. With the finished area in the basement, we're looking at just shy of 3,500 square feet of living space, priced for $355,000. And I just wanted to introduce you to this property. It's new to the market as of the new year. And my guys, Dominic and Susan, would love to sell it to a nice new family to come in and make a wonderful home out of property that they spent most of their adult lives raising the family here. It's a wonderful neighborhood, again, right in the heart of Rotterdam. And with that, I just wanted to give everybody a quick happy 2020. Goodness gracious, we all made it. And there's a lot of questions coming our way about what's going on or what went on in 2019. And guys, yes, the real estate market is still very strong, but you have to be careful when you make a blanketed statement like that, because it is definitely tiered based on what price demographic you are in. If you watch any of our previous episodes, we've discussed the millennials in the market holding up the real estate market as a whole right now. And that still is absolutely the truth. And what I mean by that is, based on certain price tiers that you gravitate into, is very sensitive to what is actually going on in pricing. Let me explain that. So once you get up into $250,000 to $300,000 price ceiling, anything below $300,000 had a great year last year. In fact, prices in most cases in those price points were either stable or in certain high desired locations did appreciate in some cases of roughly 3 to 5% in value. Once you get between $300,000 up to $400,000, certainly into the low fours, the market pretty much has leveled out at this point. Everything's kind of coasting along on an even plane, even in high demand price point areas, high demand locations. If it's outside of a high demand location, we have started to see some price depreciation in those pricing levels. Once you get up into the low fours, between $400,000, take it all the way through the $600,000 level, across all marketplaces, across all 4 counties, prices have started to decline and depreciate in those markets. And then the luxury market, which we consider anything over $600,000, we are still dealing with a very tight market. Prices in that price point have been depreciating since 2007, 2008. The market has really never recovered from when the economy bailed out back in those years. So hopefully that helps all of you out. What that means for all of us is, if you're sitting in a large home, price over $400,000, now's a great time to consider getting out of that asset, moving your equity into a smaller home of less value, where prices aren't going to depreciate at the same rate. If you're leaving the state altogether, obviously the market conditions of where you'd be buying in would be indicative of making that decision, but it is pretty well consistent across the country right now. In that the millennial market, those buyers that are shopping up to about $300,000 of value are really sustaining the market. And with the recession looming, if you're in a larger property, it makes a lot of sense to get out of those big boxes, get out of that tax bearing, and get yourself downsized into a smaller asset where your equity is going to be a little bit more stable as we head into not only an economic recession over the next couple of years, a real estate recession will be following that. If you've been looking to purchase a home and or you're looking to sell a home in those mid-range price points, if you upgrade to a luxury home or upgrade to a property of a increased value between $350,000 upward to $500,000, you're going to make up a lot of headway. a lot of ground. If you're just entering the market, first-time home buyer, rates are incredible across the board for all of us. Money is still incredibly inexpensive with rates coming in at around 3.5, 3.75, somewhere in that range depending on your credit score. You can't beat those rates out there. So with that said, happy 2020. If you have any questions, you know where to find myself, Brian McQueen, Kelly Mace, my partner. We'd be happy to advise you the best we can and help you make these tough financial decisions in a transitionary economy, in a transitionary real estate market. Take care, everybody. Happy New Year.